All right. Welcome to the Big Skinny with me, Lou Basenese, on a random Thursday because I've been traveling and we got news for you today. AI has a problem, but folks, it's not what you think it is. It's not a bubble like everyone's afraid of. It's not a chip shortage. It's not a memory shortage, even though Jensen Huang's out there saying there's $1 trillion worth of demand pent up and ready to be unleashed in the coming 12 to 24 months. So what is the problem? Well, I'll tell you what, we're going to cover it in this episode of The Big Skinny, and we're going to reveal the solution, because when you find the solutions, that's where you find the profits, and that's what we're all about here. Moving on from the AI trade, when we give you the best way to play it, we're also going to talk about one of the only VR companies that I absolutely believe will scale and obtain very high valuations on the heels of Mark Zuckerberg abandoning the Metaverse. So you want to pay attention to that for our Upside Executive Access series, where we're going to preview an interview we recently did with the CEO of this compelling VR-based company and technology company that's been in the works for 13 years and is finally ready to scale. Along the way, we're going to tell you what the energy trade is, and it's about energy. Someone's got the power, but who's got it, and how do we play it for profits in our portfolio? Because, folks, we come at you every week to increase your bottom line and ours, because as much as we have fun, we've been called the Sports Center of Financial News. That's not what it's all about, just the highlights. We got to actually make money together, and we're going to do that. Before we wrap up the show with our ever-popular friend of the family here, my partner in crime, the Dodd man, Dodzilla, as he's often known, with our headlines and Headscratchers, where we go through some of the things we got right, some of the things that just don't make sense that we're still trying to figure out, and some of the things we get wrong. But always, there are topics that concern your investment portfolio, so you want to pay attention. Along the way, we got Alexander coming in hot here. We always take your comments live from Los Angeles. Go prop to the moon. That's right. We'll cover oil, gas, energy, and even the company that I work for during my daytime job, Prairie Operating Company, on the move in the right direction, which makes me just as happy as it does our faithful listeners. So, Alexander, thank you for joining the conversation. I invite everyone else here to join the conversation as we kick off this episode 42, if you can believe it, folks. We're over a year into this endeavor, and we're just getting started. And the way we always start is with one headline in the rundown that you should absolutely ignore, because the consensus is often extremely wrong and dangerous for your wealth. One chart that contains the key data that you absolutely should pay attention to, because it gives you the insight you need to make the one investment move that should increase your bottom line. So let's get to this week's rundown. I can tell you what, everyone always dogs me, says I'm just a contrarian to be contrarian, which is a bullshit. I'm a contrarian when the data drives me.
Bullshit?
I'll tell you what. If you read our email opening today announcing this episode, I told you I've been on the road for the last 3 weeks, roughly, traveled to at least 10 different airports. And you should never trust the headlines, because everyone is talking about TSA lines out into the parking lot. Haven't seen it anywhere. They're also talking about Las Vegas just dwindling away to become the next Atlantic City. Not happening. Been in both places recently. Vegas is booming with conference business and a lot of gambling, high stakes tables. Atlantic City is dead as the Jersey Shore program on MTV. So anyway, don't trust the headlines, and don't trust this one too from Market Beat. Actually asking you the stupidest question, like, is there any doubt what you should be doing with energy stocks right now? Just because oil spiked, and these stocks that were left for dead for 12 to 18 months to 24 months, should you be selling them, holding them? No, you absolutely should not even be thinking about selling them. And here's why. Energy stocks are on a wild run right now. We'll cover it later, but the sector alone is up 36% this year, smoking every other sector in the S&P 500. And we should have known this was going to happen. We've been predicting it here for well over a year, and this is why we should have known, because Jim Cramer, the greatest contrarian indicator alive, said, man, I'm out. I'm getting out of energy. All my oil and gas. I'm out of this. This was towards the end of last year. But in all seriousness, that's not the only reason we should get short. No one was expecting energy to rally. This includes CEOs of all the major companies. This is a chart that you don't even have to read the fine print here. It says, what is the most likely cause of market instability in 2026? You know what's not on that list for any of these CEOs? It was oil spiking and running higher. The main thing, the big bar on the left here, is AI, overvaluations, tech concentration. So look, no one was predicting that they would get gronked and spiked on with higher energy prices in this sector rallying, but there were telltale signs in the market, including the fact that, well, quite frankly, energy stocks were just dirt cheap. Last year, it was the most undervalued sector in the markets, trading at about 13 times forward earnings. Fast forward to today, and it's about 19 times. So not super expensive, kind of right in line with the S&P 500. And believe it or not, of all things, the tech sector, which was wildly overvalued and has come back in, those Mag 7 stocks coming back in. But the other telltale sign was that everyone was just underweighted to energy stocks. The percentage of S&P 500, the sector controlled by energy stocks, was one of the lowest in decades at 2.8%. Even after this massive move, we're only at 3.48% of the S&P 500. Now, keep in mind, remember when everyone was freaking out because the tech sector made up over 32% of the S&P 500 weighting, and that's now pulled back? Look, I'm not saying energy is going to 10x from here and account for 30% of the S&P 500, but I'm telling you, it could go a lot higher from where it's at. The other reason that you got to love energy and believe in the momentum of the trade here is simply the fact that everyone was betting against it. Bearish bets made by the quote unquote smart money hit a record high against oil, and those guys got absolutely obliterated. Hasn't happened to a better bunch of knuckleheads ever. I love seeing it. So this contrarian trade is unfolded exactly as we anticipated, but is it over yet? No, I don't think so. If you look actually at the performance, this is what I want you to focus on, right? Focus like this guy focuses, with an intensity that you've most likely never seen before. I don't know who gets this serious about ping pong, but he's paying attention. And here's what I want you to pay attention to. It's the same thing we talk about every week. Earnings ultimately drive stock prices. And here's what the benefit of oil prices being higher for longer is. It's a windfall. It's a profit boom for these oil and gas companies, which tells us everything we need to know. We don't need to know when the Strait of Hormuz opens back up. We don't need to know when the war in Iran is over, if it ever is over. We don't know need to know who's going to help us escort ships through the Strait of Hormuz. All we need to know is that the oil and gas companies are printing more profits right now, and those are going to drop down to the bottom line and drive those stock prices higher. So this looks at all the different price scenarios here. The Financial Times did an analysis pointing out that if we stayed close to $80 to $90 a barrel, you're going to have an excess of another $50 billion in profits for oil and gas companies dropping to the bottom line. That's going to push this sector much higher from here. I want to tell you, too, projections. These oil companies are telling you, I've been arguing this for months on air. The headlines are that we can produce oil comfortably, drill, baby, drill at 50 to 60 bucks. No, we can't. Latest Dallas Fed survey shows that the producers, oil and gas producers, this is not some prognosticator at a bulge bracket bank. This is actually the operators, the leaders of oil and gas companies saying, what oil price do you need to drill new wells in your particular basin? And there's been a huge move recently. If you look in the far left, that's the Permian Basin, Midland. It's the most prolific producing oil field in the United States. And that price jumped from 61 to 69 barrels. $69 a barrel before they'll drill any new wells. So folks, what does that mean? All these windfall profits from higher prices are not going to just be reinvested and given away to drill new wells. They're actually going to go to the bottom line and increase share prices. So as we look at this week's money chart, momentum is a thing. It's durable, it's sustainable, and there is no one keeping up with the momentum that we're seeing in the energy sector right now. As I pointed out before, up 36% on the year. And then look down the list. Nothing's even close. I mean, this is a sprint out of the gates that are almost ready to lap everyone here. The tech sector, not even barely budging. A lot of red here as well, which is surprising. Everyone anticipated that the momentum from the end of last year would continue into the beginning of this year, and everything's completely changed, which is an indication you have to be nimble in these markets. But when you see a new trend unfold, you got to ride it while it lasts. I mean, if we learned anything from tech, everyone doubted that the tech sector would maintain its momentum for years on end. I'm here to tell you, the energy sector is going to keep riding this wave of increased profits, increased visibility, and increased investment. So you should keep buying the XLE. If you don't want to buy or know anything about individual oil and gas companies, own a basket of them, 23 of the best top oil and gas related companies in the United States and throughout the world exposure. This is the best way. We've been recommending this honestly since, gosh, I want to say the middle of last year. I think we'll be recommending it all the way through this year. There's plenty of upside, up about 30+% already. I think this could double from current prices alone. So if you missed it, you didn't miss it. There's plenty of room to run. But what we don't want you to miss is any episodes of The Big Skinny. So make sure you're following us on socials. You can follow us live on X all the time. We're live streaming there as well as on YouTube. We want Elon to follow us one day. I'm going to call it Twitter until he does. So follow us on Twitter. Scan the QR code on your screen. Also, we want to be a little bit like Mr. Beast. We want to have insiders trading on information on Kalshi, but we want to have as many subscribers as him. So check us out on YouTube. You get an indication, a reminder every week before we go live so that you never miss an insight or a headline that you should ignore. So speaking of which, we got plenty more to come in this episode. But first, we're going to take a quick break. We'll be right back.
Lou Basenese joining me for the hour. Markets clearly reacting to higher interest rates, gas prices, oil prices. If they stay higher for longer, like into late spring, early summer, this market heads south big time, doesn't it?
I don't think so.
No, you don't?
I don't think so. Look, and this, believe it or not, the red makes me happy here. We're only down about 4% on the S&P 500 since the war in Iran broke out, about 3% on the NASDAQ. And the fundamentals are still well intact. So we haven't seen any indication that companies are going to report lower and lower earnings. In fact, you had companies doing the opposite. I mean, Micron yesterday blew out expectations. Here's the data point I hang on to as an investor that deals with volatility. Every geopolitical event, except for two, resulted in the markets higher 12 months later, and the average about 14%. So while we may hate it in the short term and the uncertainty it creates, in the long term, it creates a great buying opportunity.
It's just $4 gas has me worried for the midterm elections.
I agree with you 100%.
Go against the GOP, we got a problem.
And that concern is growing because if you look at the oil futures pricing market, it's pushing out further and further. When this first started, it looked like this was going to be resolved in April, May, based upon futures pricing. Yep. That's pushed out now to the end of the summer, and that's going to be right in time for midterm. So a $10 increase in oil usually results in a 25-cent increase in gasoline for 2 months. So you're looking at, based on this rise, 75 cents to $1 over time.
Higher for longer. Yeah. All right. Thank you. Let's stay with me for the outputs.
All right, we're back on the Big Skinny talking to you about our Upside Executive Access Series. If you didn't know, we sit down as much as we can with the CEOs of some of the most compelling technologies and companies that are in the market. This spans things from life sciences, medical devices, biotech, new drugs, cancer cures, perhaps, Parkinson's cures, but also cutting edge technologies, including a company that we interviewed maybe beginning of February, and we just sat down with the CEO again, Virtuix. Jan Gutgolak, that's a name that, man, I've gotten plenty of practice saying it, but you got to check this out. This is a company that I would tell you has the only VR-related technology that ever excited me and made me believe that we're actually going to interact in virtual worlds. And here's why. There are military applications for this technology and the advancement of AI that make this the perfect storm of factors coming together to really help this technology launch. So what does Virtuix do? We're going to get into that a little bit today, but I want you to make sure you understand, just true to our form, one headline, one chart, and one investment insight. Right now, this headline's got it dead right. AI is absolutely transforming the way we do military training because, folks, and you'll see this in the interview we did with Jan Gutgolak, you can actually take an individual picture of any environment and, because of the power of AI, turn that into a 3D simulated replica in a matter of hours. What used to take days and weeks and setting up cameras on tripods to survey and laser shoot all around an environment, you can actually do now in an instant relative to what it used to take. And that makes what Virtuix has made, 13 years in the making, an omnidirectional treadmill that, in my mind, makes this a technology that finally turns the quote unquote term esports, video gaming, into an actual sport because you can move around. Now, there's consumer applications. Every teenage boy and early 20s something man or man boy would love this to make their gaming more interesting. I'll admit, I've never been a gamer, but I'm interested in playing on one of these devices. But what attracts me the most to it, to their Omni One platform, is the applications in the military, and they have already gotten some traction, shipping initial units into West Point and the Marine Corps to do simulated training for the brave men and women throughout our country that are keeping us safe and protecting us. And if you had any doubt, this is a massive market. The Pentagon meets the PlayStation. As we've titled this chart here, we're talking about upwards of $20 billion of market potential here for this area of video games intersecting with national security and national defense. And I think this company is going to be on the leading edge of this trend. Why don't you take a look at this clip where some of the highlights from the interview we did with Jan Gagalik, CEO of Virtuix.
The sky's the limit. It delivers a full promise of VR. We announced our joining of the Made for Meta program. It expands our addressable market by 6 million users immediately. Now we're ready to expand internationally. We announced our first international expansion for the consumer product to Europe. We have a strong IP portfolio, 25 patents, 5 more pending. The advantage we have is that our story is actually very simple. Here's our product. It's an awesome technology. It's in the market. People are using it every day. Gaming, well, that's scaling, that's growing. And in defense, people can make the leap that, okay, yeah, for defense, what an incredible capability.
All right, you can see it and understand it. And that's what I love about this technology. The second you look at what they do, you get it. You get the applications. I want you to check out the entire interview we did with Jan and the CEO of Virtuix. You can do it by scanning the QR code on our screen or going to our YouTube channel and checking it out. Truly groundbreaking stuff. And this is the beauty of these interviews, these upside interviews. You don't have to be in the weeds and understand deep technology to get these stories. That's the task that I've set for myself, is to make it so any investor, first, new to the name, can immediately understand it. And in this case, I think you're going to get the investment potential right off the bat. As Jan said there in that clip, it's obvious. You can see the leap to military applications. They actually have, and this is even more important, this is not a technology that's stuck in the lab. It's actually scaling in the markets. They did over 3 million in sales, mostly in consumer applications. And now they have the manufacturing capacity to ramp up to $100 million in annual sales. This is a company that's trading at about a $200 million market cap. You look at companies like this in the past, as those sales ramp, they go, trade at 5-10 times annual sales potential. So this is a company that quickly could come on the scene and become, it's newly public, the next billion-dollar company with a technology that everyone's going to get as soon as they see it. So I encourage you, check out our interview with Jan Gagalik, and be on the lookout. We're doing another interview tomorrow. We're taping it with the CEO of a biotech company that I believe just released data that indicates an actual treatment after 20 plus years of searching for any type of treatment that can slow the progression of Parkinson's disease. That impacts, obviously, Michael J. Fox and all the people involved with his foundation. You've seen a lot more people. This is actually impacts over 1 million Americans a year. Gain Therapeutics. We're going to have a highlight and an interview with Gene Mack. So be on the lookout for that. Make sure you're subscribed to our newsletter, to our YouTube channel, and go check out all the other upside interviews we've done with some compelling CEOs behind leading development stage drug companies, curing things potentially as nasty as pancreatic cancer, pediatric brain cancers. I mean, folks, if you're not excited about the future potential of technology and medical treatments, you just aren't informed. And that's our goal, is to make sure you get informed. So just take a little bit of your spare time right now not right now. Don't jump off right now because we're in the middle of the show. But after the show, check out these interviews, check out the investment potential in all of these companies. And with that being said, I want to bring in someone who knows all of these companies well as well, my partner in crime, Mr. Dodd, to talk a little bit more about these technologies. You have a son that is an avid gamer. I think he actually won the state championship for Rocket League with his team.
He did.
Yeah.
In Florida. Yeah.
Bravo to Hudson. I won't say your last name. We'll respect your privacy here, unlike Facebook does with most kids.
Lou, when your son tells you he actually does play sports and it's esports, at first you kind of maybe question yourself a little bit, but he's very passionate about his esports. And when he comes home and he says, I won the state championship for it, it sets it to a different level. Like, all right.
Well, dude, you can make money from it. My son was maybe a year and a half ago, he got into the Rocket League like random tournament, and got to the finals, and he would have won $2,500. So I couldn't be pissed at him for staying up till 4 a.m. because he actually almost made money, which he would have been able to spend on things. So I didn't have to spend the money on it.
Whoa, 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 whoa! I need to know where that link is to where there's money at play, because I need to send that to Hudson to say, hey, work on this angle. We're just talking high school sports here. So
If you look at, if you look, I would say this turns us in. You're seeing on the screen now the Omni One in action there, where there's actual movement. You can move in all directions here. You see this, the crouching, very ideally suited for military simulations, running you through it instead of, I think of like the old school, like aviator simulations where you're flying the plane, and like they've evolved over the years where they actually move. But this is like in your own home. It takes up 4 square feet. It folds and can go under your bed like a treadmill that, everyone used to just collect dust. I think it's really compelling, and it's got a price point that shows, and it's flying off the shelves. They were up 40% of sales in, I think, the most recent quarter. At $3,000, it's not that crazy. It's the price of a Peloton, and you really see the ability here. The CEO shared in the interview with us that he had one customer that actually lost 40 pounds in about 3 to 4 months from using this because they were playing games for so long.
Just looking at that, I'm pretty confident if I got on that thing, I would be sweating. So, I think I can
you
see
might break the measurements for it, because it's 6'7", 6'8". I don't know that it was made for as tall as a man as you.
there's only one way to find out, Lou. Can we call John and get him get a sample down here? Because we'll need to test that out.
I think we may have to see what we can do, pull some strings.
But the bigger thing is honestly the military application from an investments perspective. With the war going on right now, or I'm sorry, what is it? What are you calling it? When it's not a war, it's a excursion or a whatever it's being called.
Conflict in the Middle East. Come on, war's war, right?
Little side quest was going on.
Missiles. Yeah.
Is this, do you think this is like a trend that's happening, or is this like, just are we in the pre-infant, stages of VR for training and all that? Or do you think that we're, actually, is there wide scale?
I think there's a real trend here that's emerging. I would always tell you that fully immersive VR technology didn't have a huge growth market because people wanted to be engaged. This has a real world application now, right? You're going into a simulated world to replicate the real world so that you can perform in that. And look, you think about it, right? You roll this out in defense applications. You're not just buying one or two of them and sticking them at the Air Force Academy and at West Point and various you're buying tens of thousands of these things to adequately train troops at the same time, simultaneously, lots of them. So the growth potential here, I think, is really significant and sad. It's a sad testament to our world. But look what happened in Venezuela, right? We go in on a late night strike to extract the terrible dictator. And don't you think that we had simulations that helped us plan for that? Well, news reports actually confirm that the brave men and women that led that mission were actually training in a replica model of Maduro's house, and they were able to snatch and get in there before you can even get to the safe room. So I think you're seeing a very near-term present reminder of how big this market could be. And sadly, I don't think, even if we have peace in the Middle East and we get through this conflict in Iran, which we will, that military spending on these types of technologies and applications is going to stop anytime soon, right? Because it's peace through strength, as the president likes to say. You have to prepare for the inevitability of war, even if you never go. So you're never going to just be able to sit back and be like, oh, that's it. We took out Iran. Now we don't have to worry about it, right? Because Russia or China aren't any threats potentially.
And the fact that this can be done in a few hours, and just like the video just showed, you're, drone footage of some video footage, and then all of a sudden 2 hours later, you're, you got a VR headset on, and you're, walking the terrain, and actually experiencing the whole spatial everything about it.
No, you bring up a great point, because it is like, think about this application. You have troops on the ground. You can fly a drone overhead to get a surveillance of it, and then have one of these units, right? They're collapsible, they're portable. They certainly can fit on some of our military armaments, right? And then you train your guys and say like, hey, we're literally going to go 2 miles that way, and this is what you're going to encounter, instead of doing it blindly or having to do it with night vision goggles and drones overhead in real time and learning it then. Why not learn it in advance? So I think the applications here are really endless in terms of what's simulated. And I think if you look at every great technology that's scaled in the markets, the majority of them, I don't want to say every, but the majority of them were born out of defense spending and defense innovation. And I think this is just another one of those. And it's got a great human interest story. Jan was an investment banker. He's from Belgium. He was an industrial engineer major and then got into investment banking, but had this vision for this omnidirectional treadmill. And 13 years later, he made it a reality, got out of banking and launched this company. And I wish him all the success and think there's a great upside potential here, hence the name of our sister video podcast and interview series.
I've got to point out one more thing. You know, they have a partnership with UCF, my UCF Knights, which is, you know, fantastic.
Your UCF Knights, is there the Michael Forrestal building that I don't know about on UCF's campus yet? The donor?
No, nothing like that. Like, you slow down. But no, that they're actually using this to control robots. So the robots can, you know, the user has the headset on and is on the Omni One system and walking, and the robot is going into different different or different situations and things like that. So like that's a whole nother area that Virtuix is going into.
I mean, everyone knows from the popularity of Tesla and the market cap, right? Humanoid robots is one of the next great growth trends. I'm a little bit more pessimistic than most on it, but the fact that this technology can be used to train humanoid robots is just another vertical they can expand into. And I think that's what's interesting about the best potential investments in technology is they can expand into adjacent markets and increase the sales potential and earnings potential. So Virtuix definitely has all those factors working in its favor. So I strongly encourage everyone to check out the interview we did. And look, we're not making an official investment recommendation here. We're just trying to start you down a path to learn more about companies that you might not otherwise hear about or understand. And we'd rather you be early and profitable than late and miss out. So when you get a chance, walk inside digital worlds with Virtuix. And if you've got a gamer in your household, go to their website and check out the Omni One. If you want to send one here to us in the studio to test out, we're accepting of all gifts and donations, just like we're accepting of your comments along the way. So don't forget, we're live streaming on X and YouTube. You can choose your own adventure by posing a question to us that we can answer live. And don't ask us if we're live, because that happens pretty much every one show. Are we really live? Yes, we're live. Random question. Do you have a home IR sauna?
What is that?
I think it's an infrared sauna, which is now one of the latest crazes, health crazes and wellness crazes, alongside, the plunge pools and dry saunas. I do not. I sadly live in New York City. I don't have a spare room that I could put an IR sauna in, let alone family members that are visiting. So
I don't know. Looking at my red face, I think I might have one.
Maybe this is for you. No, it's not it's not a Jersey Shore suntan booth in your home, right? This is IR to
bake and bake.
No, this is to improve your complexion. It's got health benefits to make you stay looking younger longer. So
yeah, no, my daughter has those devices, the ones that you put on your head and your face and all the IR.
Yeah, you look
stuff.
like Iron Man, right? Yeah.
She walks around the house proudly in it, and we make fun of her.
Of course.
But when she's my age, she'll have perfect skin, unlike me. So she'll have the last laugh, I'm sure.
All right, folks, we appreciate you chiming in with your questions. Stay with us as we come back after this short break to talk about some compelling investments to make related to AI and that big problem that the AI space is facing. We'll be right back after this short break.
Major companies fleeing blue states for red ones in search of better business climates, including low taxes, and politicians, that actually support capitalism. Yamaha Motor Corp relocating its headquarters from California to Georgia, ExxonMobil moving its corporate registration from New Jersey to Texas, and Starbucks reportedly plotting a huge office move to Nashville. Fox Business contributor Lou Basenese joins me now. Lou, when are these far left governors going to realize that they are at a tipping point where businesses, they're not coming back so long as these far left governors and far left assemblies continue with their socialist policies?
I mean, you want the truth? I don't think they're ever going to realize it's too late. I mean, it just is. I mean, look at Kathy Hochul, right? She comes out and she's begging New York residents, go down to Palm Beach and get a bus and drag them back, not change the tax policy. I mean, people are moving first. Companies are just following the U-Hauls. We've seen a mass exodus from all these blue states, California, Massachusetts, New Jersey, Illinois, New York. The U-Hauls are leaving the businesses now. Think about it. These are two companies, 50 years in California, 188 years in New Jersey. It's not suddenly go woke, go broke. It's a very insidious hollowing out that you can't reverse by just going on media and making an appeal. Please come back. Please come back to New York.
I'm glad you mentioned.
All right, welcome back to the Big Skinny with Lou Basenese, where we're addressing AI's big problem. It's not chips. Everyone's long chips. There's plenty of supply of chips. There's a little bit of shortage of memory, which you need, but the technical side is there in terms of the actual technology that enables AI. But you know what's not there? The power, folks. Global demand for data center power provisions is going up, 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 and to the right. And folks, I gotta admit, there is no He-Man here that's got all the power. If you look across the globe here, you see as we get into the back half of this decade into early next, tremendous growth for data center power usage. And the reality is it's not just data centers that require all of this power. People do too. I think this is one of the best charts I've ever seen to drive home how fortunate us in the developed world are in terms of the availability of power. If you look at most African nations here that are listed on this chart, this is the per capita energy consumption per year for the average person in these countries. And then that is the average person in America's refrigerator. That's right. Your refrigerator at home consumes more energy than roughly 3 billion people in the world do an entire year individually. So there's nothing that says that because we were born in developed countries that we're entitled to readily available power more than anyone else. So there's this demand push from there's a direct correlation between reliable energy and income. So there's underpinning this, the 7-8 billion people in the world that all deserve the same thing. You have power demand outstripping supply. This looks like a gator chomp, and my Gators got chomped in the NCAA tournament. But here, folks, there's only two solutions to this, right? Either we slow down on power demand, right? We cut back on consumption. Not happening. You've got 3 billion people that are trying to get access to it, and you've got us consumers in the developed world that just want to do more with more devices and use more power. So that means we've got to build it. If you build it, it will happen. And that creates a tremendous opportunity, not just for investments, but for careers. If you look now, this chart here coming out of the venture firm Andreessen Horowitz, showing that over the next roughly, call it, 10 years or so, we have to have at least 300,000 more skilled tradesmen and women. These jobs need to be created and filled to meet the demands of AI and data center usage. So folks, there's opportunities there. What I also want to make clear is these are based on our best estimates, and historically we've missed predicting the ramp in these estimates for AI just consistently. So if this is what we think today we need, the reality is it's probably 2x, 3x, maybe even 5x more than what we're anticipating. This sets the stage for some tremendous opportunities for investing, because when it's a supply and demand imbalance, you know that the companies that can meet that demand are going to be able to profit more. Now, here's the thing. China's got a lot of power. We got some catching up to do with China because they didn't have any ESG movement, any energy transition movement. They had an energy addition focus where they just added as much power generation capabilities they could to the country, whether it was coming from natural gas or coal or hydropower or solar or wind. At the same time, China brought on the most solar panel and solar power probably out of any country in the last decade, but they also had brought on the most coal-fired power plants because they knew that the world was going to consume a ton more energy for all the data-driven things that we do. And we don't have a choice now. What does that come down to? The U.S. has no choice but to close this gap and generate enough power to fund and power, pun intended, these data centers you see here. The orange is what needs to be met. So we're going to build it. That's going to be a tremendous opportunity. And here's what I want to take home. This is a frequent guest of the show. Anyone here that's worried about an AI bubble, you have to really take a careful look at this quote from Daniel Newman, CEO of the Futurum Group. You can't have both. AI can't be eating everything in every industry and albeit a bubble at the same time. It's a revolution. You're seeing the demand. It's not a bubble when there's just more demand than there is supply years out into the future, and that's what we have. So how do you play this? Well, I used AI to make sure we weren't missing any potential opportunities here. And I used good old ChatGPT to give me every single US listed publicly traded company that is based and adjacent to the AI power needs. So chips and you got power suppliers, data center builders, big REITs like EQIX, Equinix. It's one of the biggest and oldest data center REITs that's in the market. You've got names like Wolf, TeraWulf, WULF, which I think is one of the best positioned alongside Core Scientific and probably IREN and Cypher. Those are some of the best positioned companies that were Bitcoin miners first and then pivoted to provide data center and compute power. You've got Avago. You've got, I mean, there's names all through here. There's Modine, MOD. This is an AI stock that's probably not on most people's radar, but they make cooling systems, the HVAC systems that cool data centers. Guess what? When you start propping up tons of data centers in the heat of Texas, you better have good AC because these things run hot even in the cold of New York State. They run way hotter in Texas, and you've got to have just those adjacent industries, the physical infrastructure that enables this digital ramp. And most people are just grossly under investing in here, just like they were with energy in years past. So I think there's a tremendous opportunity in the market right now for you to get ahead as long as you focus. Now, obviously, you have the same problem I have when you look at that chart with at least 100 plus tickers on that, right? That's over 120 different investment options to play this trend. You got the same problem I do. I don't have enough capital to invest in all of those. So you want to play in names that you know have definitive leadership potential and already established that. I want to encourage you to check out one of our earlier episodes where we interviewed the CFO of TeraWulf, Patrick Fleury. We also did an upside interview with the CEO of TeraWulf, Paul Prager. The reason I focus on these guys is because they came out of the power generation industry, building power plants. Yeah, they started TeraWulf and were doing Bitcoin mining first, but they were not Bitcoin bros that all of a sudden realized that was not going to be the future, that they had to pivot to AI data centers. These were guys that knew early and at scale that AI data centers were going to be a huge thing, and there was going to be a huge gap in the market, a dramatic undersupply, and they've built the model to scale into this. So TeraWulf, as you look, there's a lot of volatility in these names in the last, call it 6 to 9 months, but TeraWulf has hung in there the best, in my opinion. IREN, IREN. We had one of the board of directors members on the program before. We also, Core Scientific is another favorite. That Core we've tried to acquire and failed twice. I think they've got huge potential here. The ticker there is CORZ. So folks, we tell you that we're going to give you one investable idea every episode. I've given you at least 4 today. Virtuix, Core Scientific, IREN, TeraWulf, and there's more. Modine. That's a 5-pack. We can make it 6. I also love in this space Teradyne, the AI chip maker that makes testing equipment. So it's not just AI chips, but every chip that's ever made is another great way to play these growing tech trends that are going to dominate, not for a quarter or a year, but for the next 5 to 10 years. So don't miss out. Don't miss out on any of these opportunities, and don't miss out on an episode of The Big Skinny. Make sure you're following us on socials. We're going to be right back after one more quick break. But first, we got a comment from our forever faithful Chad Towers, who's probably going to ask me a question about Prairie, and I'm going to see if I'm able to answer it based upon the fact we're going to be reporting earnings next week, filing our 10K and quarterly report on March 31st. But do I feel better, the same, or worse about Prairie's positioning today versus when you first took the market strategy role? I can tell, and why. I can't tell you the why until all the information is publicly released. You got to see the quarterly results because that's the data that's going to demonstrate. But I feel better. It's not the same. It's not worse. I feel better based upon the recent developments, based upon the recent news. And hopefully, as you see, we execute and continue to execute on our growth potential in a market that has now, when I started with Prairie, nobody loved the oil and gas. We were still working off the cobwebs from the Biden administration in terms of people being interested in increasing U.S. energy dominance and independence. And now that pendulum has swung all the way back to the other way, where it is not only outperforming in the market, but also a key national security and national priority. So I feel way better. That's some reasons why that aren't necessarily Prairie specific. So Chad, appreciate your comments, appreciate your participation all the time, every time. And don't you forget to join the conversation as well. Ask questions. We answer them all, even the hard ones. We'll be right back after a quick break.
Online.
For more, let's bring in Fox Business contributor Lou Basenese. It's great to see you, Lou. And we were talking about this on our show earlier today. And one of the arguments was, well, a lot of the things that are in this framework are actually happening already in practice. So what's the need for the framework? And my answer to that was, well, those things are happening in practice because of who is in the White House. But when he is not in the White House, companies may not feel the same need to comply. And so the framework then creates legislation around it to create some structure.
I'm in your camp, and Brian's going to push back on me because he's the raving fan of federalism. Here's what we need to do. We learned the hard way with social media. If you scale fast and first and worry about protection later, you pay the consequences, and our kids suffered. And I think the AI superhighway is being built. We need to put in car seats, but also not speed limits, right? We need to innovate quickly. We got to make sure the kids are protected, because this is not just about new technology. It's a national security issue. And I'm sorry, I'm a fan of federalism too, but if you leave it up to 50 different states to regulate this, that's a national security technology we're putting in the hands of the states that don't really have the authority, or any of these politicians the insight into AI to understand how this dynamic technology needs to work and function this week, let alone 3 years from now. So
all right, we're back on the Big Skinny with Lou Basenese, and now it's going to be with the Dodd man as well, because he's coming in for one of my favorite segments, Headlines and Headscratchers, where we evaluate some of the headlines that make us go, what? Are you kidding me? Some of the calls that I've made, right? So Dodd gets to call me out for being wrong. That's probably your favorite part of the show. You didn't hear what I said? I just gave you, I just set you up like super V-spike volleyball. You could just smack me down and give you, yeah, you missed it. So anyway, we're moving right along.
Epic fail live.
It's the beauty of live shows, folks. You got to keep moving along.
I think I'm still
There's no
sleeping
time to,
from last night, brother.
yeah, you were up late. I put you in a bad position. For those that don't know, Dodd is the man, the myth, the genius behind all of our images here. So I kind of put him in a tough spot and had a lot of work for him to do, and he was up late. So that being said, let's get to this week's headline and head scratchers. Dumb.
Speaking of,
yeah,
what are the odds
that
the first one is titled dumb?
Yeah, this is dumb.
But it wasn't talking about me.
No, it's not. Look, I think this is actually, I had a conversation with a company that is going public via a direct public offering, direct listing in a couple of weeks. We're going to have him on an interview of the upside in the future. I asked him this because we're talking about AI and energy. I'm like, I think power is the gating element, like the gating item for AI scaling. And he's like, no, it's people. I'm like, well, what do you mean? People to like build the power plants and the data centers? He's like, no. He's got a company that actually has an AI technology that they apply to boring businesses that improves their profitability, sales, all the business metrics that you want. And he said the biggest impediment is that humans don't want to adopt it. And it's actually right? Like, it's dumb that we don't want to do this, but it's actually what's happening. And his point was that you got to get the buy-in from the employees. So it's got to be their idea, like, hey, let's use AI in this application and therefore roll it out, as opposed to them being the ones who sabotage AI plans. So I think it's really dumb if you're sitting in a position trying to be resisting AI in your job. You should be embracing it, because and Dodd, I want to hear your thoughts on this. I think there's going to be two groups. It's not going to be the software apocalypse and job apocalypse where everyone gets put out of work, whether you're, using AI or not. It's going to be the people that use AI and the people that don't use it, the ones that embrace it and the ones that just, turn their nose up at it and say, no way, no how. That's going to be the separation. So you need to be leaning in and learning, because if your main job and task of your job can be automated, it's going to be automated. So you better learn how to manage it with AI and grow and evolve. What do you think?
100%.
You come from the creative world. So I'm curious on your thoughts.
No, I think this makes absolute sense, because you know me, we've known each other a long time. I I say I fear change, and it's not about fear as much as I don't like my cheese moved. Once you get used to something and you're working in a certain way, or you have a certain schedule or whatever it is, AI kind of disrupts everything, workflow, outcome. If you don't embrace what the productivity side of what AI can do and what it can exponentially help you with, that's what I'm learning slowly over time. But
Yeah.
I think the people that embrace AI immediately and really, like you said, it's learn, practice, and keep using it. And I think we're doing a good job of trying that, but I feel like I'm probably at the tip of the iceberg of anything really using AI.
Well, you got to remember, and this would be my encouragement to everyone, lean in, right? Because everyone's in the same camp. Aside from the people that have just been lifelong coders and programmers and early adopters, the majority of the global workforce is just now starting to use these tools, and they're developing so fastly that you're going to get left behind if you just don't start. You got to start somewhere. And the fact that you are using it and embracing it, I think, is going to give you the advantage ahead of that group of people that are just going to be the Luddite loos of the world, that are going to say, no way, man, I'm not adopting it. I want to be the Amish of the 2000s era and just not use any technology. Those are the ones that are going to get left behind, not people that actually try and embrace this and figure out a new path, even if your job gets replaced, right? Because when the automobile came along, right, all the
horse and buggy folks,
horse and buggy folks, manufacturers, man, they went out of business pretty quickly, right?
Yeah. But
So
like you said,
and new jobs are going to be created that we can't even conceive of right now.
I don't think it's going to happen so fast. And I'm not saying every single job, because I'm not thinking of certain jobs that might get replaced immediately or whatnot. But like, as a big grand scale, if you lean in and take your job and use AI to make yourself better, your team better, your process better, your product better, your obviously your earnings better, then you're going to be a hero, and you're going to learn and grow, and shoot, you might adapt from that into even better at doing your job. So I don't think it's AI is the death of the world. You just have to.
You know what I want it to be the death of, though?
What?
Influencers. I hope influencers die. Like the dumb influencers, the ones that are like, everyone keeps asking me, where did I get my makeup? And where do I try new technology? No, they aren't. No one's ever asking you. No, no one wants to know.
You're profiling a little bit, because I mean, like, you're an influencer, Lou.
I'm a bad influencer. That's what my buddy Uri and I say, a bad influencer. I'm bad at being a stereotypical influencer. Yes, we have influence, and digital platforms have helped, but I hope that just the fake stuff goes away, right? AI is able to sniff it out and be like, that person really didn't pay for that meal. They don't actually like that food. They just got it for free on a trip. Like, get rid of that. That's fake advertising, right? It's salesmanship that's not even genuine, but that's dumb.
If people
and
will
we've
buy
got
it,
dumber,
they will just get more successful. So it's a cycle that I don't know how you're going to break that cycle.
Yeah, but I mean, look, the influencer job is a proof positive that there will be new jobs created that we could never think of. I don't think there was any person in the world that predicted influencer would be a job at any point in time. So anyway, from dumb to dumberer.
Dumberer.
Is that weird? Dumberer.
So this, I have to say, I missed this week. Luckily, I was too busy, and I didn't know this, that this all happened.
Yeah. So this is
I didn't get caught up in it, which I guess I'm lucky, because I probably would have tried to chase something silly like this, right?
Yeah. So this is a fund that has ownership in some of the most compelling IPOs that are coming public potentially this year. So Anthropic, SpaceX, add a few more to that list. And this was a way for you, if you bought into the fund, you would get a fractional ownership of what they own. Now, here's the problem. It's only traded for 6 or 7 days now. The price went up over $565 here in short order, and you were essentially paying, there was $19 worth of ownership in those IPOs. So you were paying a $500+ premium. So that's like me coming to you with an iPhone that's worth $1,000 and you're telling me you're going to spend 5x more just to own a piece, not even that, 50x more to own a piece of that because it's the only way. This is stupid. It's idiotic. This is the downside of too much retail involvement and the FOMO retail investing or degenerate trading that's out there. And if you actually pull up the ticker for VCX today, it was down significantly. Citron Research, who I don't find them super credible. This was an easy pick. They came out with a short report on it, but you don't have to overpay for already overvalued assets. It doesn't make sense in any world. This is the greater fool theory at work.
Was there anything on the actual fund side that they did inappropriately, or was it really just a meme type situation where retail investment just got ahead of itself and got out of control?
It's the latter. They didn't do anything wrong. These types of vehicles have existed for years in different forms and different ways to gain access to pre-IPO companies and shares. This just got bid up stupidly on nothing, right? Like just nothing. And then guess what happens,
So is this like a day trader's dream or what? Like, if
yeah,
someone
I'm
hit this
sure.
right? I mean,
we saw it with meme coins, right? People are willing to buy something that has absolutely no value. And in this case, there is value underpinning this, just not enough to justify a $500 stock price or even a $250 stock price where it's currently at. So stay away. This is the dumbest investment you can make in this market. We're here to give you smart investments. We've given you at least 5, maybe 6.
There's also hidden fees and a lot of other things involved in those funds, correct?
Look at you, man. Yeah, there are expense ratios. Yeah, but man, who cares about a 1 or 2% or 4% fee when you've lost 98% of your investment because you bought at the wrong time? So.
Or who cares about that if you gained a whole bunch either, I guess. But
don't feed into degenerate speculation, my friend.
Dude, I told you, I stay away from it. I don't.
We're trying to educate the people here. Educate them about dumberer, and .commies, because .commies need to be taken out of power, just like the communist dictators that are getting taken out of power throughout the world. This article appeared the middle of last year. Economist warns the AI bubble is worse than immediately before the .com implosion. This economist looks like an idiot right now. It's not anywhere close. And we'll show a chart at the end of the show that proves we're not anywhere close. Guys, I've said this time and time again. You don't get any bonus points for predicting the top in a market, and you don't get any bonus points for just spewing fear-mongering out in the headlines, but the media just takes the bait every time. They want to believe that somebody knows something that no one else does, and that's why we always come back to the data. I think that's what I've hopefully taught everyone here is like, hey, click the clickbait, but then go dig into the data and see, does it really justify such an extreme position? And we're going to get to that a little bit later on. So don't believe the hype that AI is a bubble. It's not. Anyone saying that they know exactly when it's going to pop they've lost their mind. They don't know.
And like you said, chart coming up that proves that out.
Yes.
All right. Shakalaka.
Do you remember NBA Jams?
Of course.
Do you remember?
Who doesn't? Yeah.
Arcade. Yeah, but kids of today don't know. They didn't grow up going to malls where you could go into an arcade and your parents would give you $5, 20 quarters, and you thought you had everything at your fingertips forever. Anyway, for those you might be younger, never played, you would get on fire and you dunk and it'd be like, boom, shakalaka, right? This is dunking on all those people that are calling for the job apocalypse. You're seeing now the trend in software engineers going up and to the right. They're growing. AI is not, and coding is not getting replaced, is not replacing everyone. You can't do it. You need actually more. There was a great study, I think I talked about it last week, from Alibaba, the Chinese company, that showed they followed, I think 8 months worth of AI projects and programming projects where they tried to give the control over to AI and found that 75% of those projects that required maintenance and upkeep failed within 8 months because AI can't do that. It can do an individual task, but you actually needed human supervision and interaction to keep these critical things, like e-commerce platforms functioning. You don't just want to turn it over to a little AI agent and say, oh yeah, keep Amazon running. Let's see how that goes. That's not happening. Yeah. So I love seeing this. This is the alternative.
Once again, the best thing you can do is learn AI, learn as much about it as possible, how to use it, and how to benefit from it. Because I agree, it's not going to replace every job out there.
If you get your omnidirectional VR headset, I want like an old school NBA Jams arcade game, man. The thing was the best.
I just saw I was doing a little thrifting this past weekend with the family, just something to do, and saw Atari games. You remember Atari? Did you have
I
Atari?
remember it. Sorry, Pong with the little
Combat?
paddle.
Yeah, with
Yeah,
the paddle. What was your first video game? What set?
it
Was
was
it
the Atari 64, right?
Mine was
Yeah.
even before that, the Intellivision. It was literally a base like this with 2 knobs, and it was
Uh,
like
I got
y
you beat. I
no,
got
what
you beat. I
okay.
promise you. We had a Commodore 64. Now the Atari was before that, but I do remember this before other videos became popular. We had the 5.5-inch floppy disks. We played
Yes.
hockey as a video game at Thanksgiving with my cousins, and it wasn't even a video game. It was just text. You'd come up with your team name, and then it would say, "Do you want to pass or shoot?" And you'd press 1 to pass or 2 to shoot, and then you'd push the button, and it'd be like, "You missed." They saved it. And the other team got the puck. Do you want to pass or shoot? And we played this game for hours. So
I hate to
it's real.
admit this. I hate to admit this, but you did beat me. I don't think I was stupid enough to play that. Did you call it playing a video game? Because that
Yes,
doesn't
it's
sound like
called playing hockey with my cousins. Yeah, we're playing the hockey video game. Listen, man,
oh, dear.
Bud Lake, New Jersey can get really boring. So,
Yeah.
anyway, moving along, hackers. This is another interesting story that I don't think I've ever shared publicly.
I don't know who this
I
guy is.
You don't know who John McAfee is?
I mean, I think I've heard you talk about
McAfee
him.
antivirus. He went cuckoo crazy in Belize. He sold his company and when it went nuts, and he was into cannibalism and other weird proclivities
Mm-mm.
sexually. Like we interviewed him because he
Did he
created
hang out with
basically.
Jeffrey Epstein or something? I mean, sounds
No,
like he's
no,
had
this is before, but he created he was the father of the cybersecurity industry, right? He had the
okay.
first big cybersecurity company. We were doing a marketing campaign. This was back in 2016. This is in a very famous theater in Memphis because he lived on like a compound an hour outside. We sat down. I was with him for half a day. The weirdest guy I've ever been around. He knew, like, we had a burner phone, thankfully, because he was showing us how the biggest threat to cybersecurity is actually humans and just doing dumb things and giving hackers access to stuff. But this thing never saw the light of day because like 2 weeks later, the documentary Gringo, The Dangerous Life of John McAfee came out, and we're like, I don't want our names associated with him any way, shape, or form. So why am I bringing it up now? Because I think the next big trend in AI that no one else is thinking about is cybersecurity. The more data we create, the more that we have to defend and protect against. And we're always playing a game of catch up when it comes to cybersecurity. The criminals are always 2 steps ahead, just like the Wall Street capitalists are always 2 steps ahead of being more innovative to make money. And with AI, we are now going to exponentially grow the amount of data that needs to be defended. So I think you got to own a cybersecurity ETF. You can't own an individual company because none of them will be able to do all things for all data security and cybersecurity. My favorite is the oldest cybersecurity ETF, Hack. I think we're now up to 7 recommendations this episode. This could have the most recommendations we've ever made in a single episode as we close it out here. So anyway, that's my video game, not video game, and John McAfee crazy cybersecurity stories.
All right. Well, you definitely beat me on the video game thing. I thought in television was going to take the cake there.
No, you didn't.
Who knew? Commodore 64.
Commodore 64. Well, before we run, we got one final thought. We promised this before to talk about the .commies. Then this is not an AI bubble that is about to burst. So before we run, I want to show you the data that we've been teasing, and it comes from a fellow that I share the studio with here, Phil Rosen. Some great data here showing the difference between the .com day valuations and the present day AI boom valuations. And you don't have to be a genius to figure this out. We're nowhere near the valuations and the overhyped and overvalued prices we saw with the likes of Cisco and AOL and even Microsoft, which interestingly enough, is one of the few companies that survived the .com days and made it through, right? Cisco just hit a new all-time high last year since 1999 or 2000. So look at the valuations here. The Mag 7 are actually starting to get cheap, dare I say it. Bubbles don't burst when assets are super cheap. So that's all I got.
The .com era there kind of looks like the SpaceX fund there that was everybody was going into. Very similar.
Hey, the other thing that's different this time around, we actually have earnings, and this is why this got so lopsided. Those .com companies didn't have tons of earnings and revenue growth. They had things like clicks and eyeballs and all that nonsense that really didn't translate to real business results. So with that being said, we've reached the end of our show, but because the Gators got eliminated, we're ending on a big note. It's go Yankees now. Baseball season officially starting yesterday. The Yankees, perfect record, 1-0.
A Yankees fan, isn't he? Oh,
What?
What?
How,
UCF fan? How did that happen?
I'm going to kill you. I'm going to absolutely kill you. This picture of my son had a Yankees hat on, and now there he is. Whew. There is a God in heaven that saved him from the UCF hat. Go Yankees. Go to Twitter. Follow us there. Go to YouTube. Subscribe to our channel. And then go to our website, thebigskinny.com, where you can sign up for our email newsletter where we deliver to you the insights, one headline at a time that you should ignore, one chart that you should absolutely pay attention to for the key data, and one investment insight that will hopefully help you and us increase our bottom line. Until next time, I'm Lou and
Dodd
signing off.
I need a better sign off than that, brother.
Agreed. You got it. You got a couple days to figure it out.